Hey guys, I just wanted to make a real quick video outlining why I think Bitcoin is actually in a very scary place at the moment. I actually warned about this on a live stream I did on June 13th and have been incredibly bear biased ever since. So the chart that actually made me the most bearish was the weekly chart. And just zooming out here, I've outlined the signal I'm talking about and how this has actually played out in the past. I'll get into that in a second. Sorry, getting tongue tied here. Obviously, nothing has to repeat itself, but throughout Bitcoin's weekly chart in the last few market cycles, at least, this signal has called for some very serious price corrections. Basically, there is a combination of red flags that are currently jumping out at me. One, I'm actually going to remove the wicks because generally speaking, people care a lot more about candle bodies and what they're doing rather than what the wicks are doing themselves. And you'll notice that there is this little bit of a break in structure. This is micro analyzing, but just going to on this trend for what it is here. Basically looking at higher highs. We kept setting higher high, higher low, higher high, higher low. Now, this is actually the level that a lot of people are watching, is kind of that 50 to 53K region. I would expect some sort of a good bounce if we get to that level, just because there is so many people watching that level. I believe the macro 382 fib is around that level. There's just that little bit of a support pause that we had there. So a few things going for that level. However, a lot of people are still looking at this as the higher low. And what I'm kind of seeing here is that we, in fact, got another higher high here, and this as our higher low. Again, just for that immediate trend there on the weekly chart. But for those of you who follow my regular YouTube channel, you'll know that this is the exact setup that I talk about every week in my streams. I like to see that sort of a market structure followed by a pullback to what I refer to as the Stuber fib pocket. It's just basically after getting a structure break, looking for retest of the 786, 886 Fibonacci pocket. So now that I pointed out where this break is from, I'm going to pull a Fibonacci from where the top of this cycle is so far down to where we found this little bit of support here after the structure break. Look where we end up finding a little bit of resistance here. You can see that these candle wicks end up wicking right and basically filling that pocket absolutely perfectly. Candle bodies are respecting that pocket as resistance, not even closing up in there. So that's a couple of things that did draw my attention already. On top of that, you can see that we also lost this upward sloping trend line. I do consider this a valid trend line. I know not everybody's into diagonal support or diagonal trend lines in general, but this one does have at least 3 exact touch points here and then getting the close below. So even if we do get some sort here, I just really think Bitcoin's going to have a hard time because there's so many things that may be flipping from support into resistance at this point, just because of it's not so much like I know a lot of people are looking at the range as kind of being here and saying that, hey, we're just at the bottom of the range. But technically there was this mini range up here that formed. And I think a lot of people are overlooking that because the fact that, like I pointed out, we got that structure break, we retested that Fibonacci point. And on top of that, something I want to point out that I believe is very, very important is just look to the bottom of my chart, the RSI here. Now, just the fact that we were overbought, I know a lot of people think that, hey, as soon as the RSI goes over 70, you're overbought. Actually, the RSI is the strength index, the relative strength index. So in a bull market like this, while the pressure is up here, I'm just more so looking at it as a lot of buying pressure. But it's this exact bearish divergence that I'm mostly concerned about, that we're basically, since we went from extreme overbought conditions down towards respecting that 70 level again, that's a very specific divergence that I've looked for with double tops, just breaks in structure, stuff like that. It's a very powerful confluence that I've enjoyed using on basically any time frame. Noticing this on the weekly chart it just kind of reminded me of it. And lately I've been playing that on scalp setups on the 1 minute, the 5 minute, most recently a 1 hour chart. A very powerful reversal signal. To have all of these things lining up like this on its own, a divergence like that, not necessarily the end of the world, but just the fact that we have this structure break, that Fibonacci pull, that RSI divergence, kind of everything kind of lining up right now. That has basically sparked a very serious correction. I mean, from where we had this divergence touch point, because that's exactly how I like it on that touch point there. Just looking at so far, we've got about a 20% correction. I said 18 here, but about 20, somewhere in there anyways. Just going to zoom out and point out a few other times that this has happened in the past and why I'm so concerned about how Bitcoin looks right now. You can see that all of these examples here, they check all those boxes, right? Just as they come to me here, we have the upward diagonal trend lines, losing support. We have some sort of a horizontal break in structure. If I zoom in and took off the wicks again, you'd see very similar to what happened here. Just a nice tight invalidation like that. Just a nice tight range that has a little break in structure like that. So on top of that, most of them do as well pull back to the 786, 886 fib pocket, but this is all very, obviously I'd have to zoom in and start laying some of this out here. But yeah, basically just all those things kind of being mapped out together here. You can see all the times I put these vertical red dotted lines here, basically wherever we get that divergence touch of the RSI on the 70 line. And you can just see what kind of a correction that it's sparked in the past. Like I said, from here, what did we get here? We got about minus 78, 80% correction. Here, yes, maybe it was due to COVID, but the charts had the exact same pattern there. 62, 65, somewhere in there, serious correction there. Back here, what's basically sparked the first half of our last bear market, 50% correction to the downside, followed by getting that same retest on the RSI, same bearish divergence, basically a double top here. So kind of the same signal there, which did mark our entire bull market top and then corrected around 77, 80% correction there. So obviously this does not have to repeat itself. This is just something that I'm looking at in the charts and why I think that it's something that should be taken quite seriously. Just to go to an example, I'm actually in 3 short positions right now because I am so bearish on the market. And you can see here on the 1 hour chart is exactly why I ended up taking my first short here on this relief rally. A lot of people on social media and that sort of stuff, when we were having this little climb here, everyone was starting to get really excited and that sort of thing. I was more looking for reasons to short the market, because for almost 3 weeks now, this was June 13th here, I've been very bearish on the market ever since that. So I was looking for reasons to get into new shorts. Saw that exact same pattern playing out on the 1 hour. As I said, I see it in all these different time frames. We have this RSI divergence from extreme overbought conditions down to that 70 test. You can see that this red line here is where we broke our higher low, got our retest, that 786, 886 fib. Boom, that was my signal to take my first short. Ended up taking another one on the way down, and then actually more recently just ended up taking a third short. And I was actually talking with someone else about this. If I bring up my auto charting tools, you can see I just pulled a Fibonacci. Basically, well, same thing here. We have a structure break, pulling a Fibonacci from this lower high signal down to this lower low signal, just having an indicator also agree with me that this is the range that I wanted to see. And look at that. Where do we end up bouncing to? Right into that 786, 886 fib pocket. So that was actually my third short that I ended up taking. You can see I'm on that one over a 80% profit, over a 38% profit, over a 400% profit. So playing the short side has been good to me recently. I know a lot of people are stuck in moon boy mentality, but just zooming in at this weekly chart, I just see reason to believe that, at least to be cautious. Yes, this could easily be invalidated. That's the thing with trading, right? Charts change. As the structure changes, we break some sort of a lower high structure. Even on the 4 hour chart, I'll start to lean a little more bullish, but we don't have that yet. So as it stands right now, I am definitely favoring the bearish side while I am scalping and taking swing trades, anything. Obviously, I have been taking profits on all of these positions. See, these indicators are just beautiful. But look how well on the 5 minute this auto charting tool tools just help me lay out the trend here. Just signals lower high, lower high, lower low, lower high, lower high, lower low. It's a beautiful job of pointing out the trend here. And again, you can use those helping you pull Fibonacci's for confluence and stuff like that. So very cool. And it just looks fantastic, obviously. On top of getting this retest of this 786, 886 fib pocket, also ended up getting a bearish divergence on my oscillator down here. So just a few things lining up there. So yeah, like I said, I'm currently in 3 short positions. I don't even have half of each of them open at this point because you know what? I'm a big fan of playing the range first and hoping to catch a runner with the rest. And just the fact that we did come back down towards this level here, just getting a little bit of a fake out here so far. Looks like there's a potential for this to just be some sort of a liquidity grab and before some sort of a reversal. So I'm actually tempted to take a little hedge long, but at this point, I'm just going to be slowly scaling out of my short positions. But like I said, I see reasons for potentially big bearish moves. So yeah, I'm basically playing the ranges as they come, but I'm hoping to catch a running position with kind of the second half and last quarter of my positions after taking some profits along the way, reducing risk and also just remembering to pay myself, right? Because even if I'm wrong on positions, I still want to be able to take some profits or at least soften the blow on the way. So yeah, anyways, that's my main concern with Bitcoin right now and how I see it playing out for the next little bit. I wish I had better news, but that's just what it looks like to me personally. With that, stay safe, my friends. Peace.